Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the US Consumer Price Index announcement. Now, those of you who have seen me this week, they know that how excited I've been for this event. And hi, Eric, how you doing, buddy? Good to see you. Great to see you. How excited I am about this event and how the market is so excited about this event. But anyway, before we get into all this, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. Oh, hello. Hi. Hello, Philip. Hi there. Hello, everybody. Hello. Good to see you, everyone. Hope you're all great. Okay, so yeah, let's get started. So this is Happy US CPI Day. Now, like I said, at the beginning of this video, I've been really excited about this. The market has been really excited about this because ever since we had that strong NFP number on Friday, the market has been anticipating this because, and I will tell you why. But let's go through a couple of things. Those who are new to trading, okay, I want to explain the difference between the CPI and the core CPI, because don't forget, we have 4 CPI numbers today, 4 CPI numbers. So there is a difference. You know, we got US CPI year on year, US CPI month on month, US core CPI year on year, and US core CPI month on month. But what are the differences? Okay. I'll explain. Now, US Consumer Price Index, okay, is released by the US Bureau of Labor Statistics, and it is the measure of the change in the price of a basket of goods and services. Now, Core Consumer Price Index is released by the US Department of Labor Statistics, and it measures the change in the price of a basket of goods and services, not including food and energy. So not including oil prices or food prices. The reason being, okay, the reason why the Fed focuses on the core a lot is because they have no control over volatile price movements like oil and food. Okay, so this is the difference. Their core does not include food and energy. It includes clothing, watches, items, day stuff, the house, things like that. Now, the US CPI year on year is expected to come in at 8.7%, lower than the previous number of 9.1%, okay? The core, remember, doesn't include oil or food, is expected to come in higher than the previous number of 6.1%. Previous was 5.9%. In general, year on year is, like I say, 8.7. US CPI month on month, 0.2, which is again lower figure. US core CPI year on year expected 6.1, like I say, higher. And US core CPI month on month expected at 0.5%. Okay. Now, the reason why that they're expecting the US CPI year on year, okay, to drop is because of the recent fall in oil prices. Now, those of you who were kind enough to join me this morning when we did a little preview on this, we had a look at oil prices and we realized, well, we looked at it over the last 3 months and we've seen that oil has indeed generally started to lower in general. But here's the thing, okay, it's been lower for a couple of months, but it hasn't changed the outcome of the year-on-year CPI, okay? And this is my little thing. And the other thing I wanted to mention as well, in reference to the CPI year-on-year, is this is a number they've got wrong quite a few times. February is the only time they got it right. The estimation was right. They estimated 7.9. It came in at 7.9. March came in 8.4. It was 8.5. In April, they said it was going to be 8.1. It came in 8.3. In May, 8.3. It came in at 8.6. And last month, which was a shocker, came in at 8.8. It actually came in at 9.1. Yeah, that's true. That's true. Yeah, he did. He sold a lot of, 6.8 million. I think obviously he's got this big important court case with Twitter coming up as well, which is obviously put strain on him. But yeah, so as you can see, it has gone, they've got it wrong, this estimation, for the last, since February. But here's the other thing I wanted to point out as well. Don't forget, oil prices started to go high in February. okay, in February. And that was obviously because Ukraine's invasion, Russia's invasion of Ukraine. But in January, before there was any war, it was 7.5. So you see what I mean? It was 7.5 in January, no war. And the fact of the matter is, we have got this huge inflation crisis across the globe. So like I say, well, this is it. I think he's asset rich, isn't he, Eric? So I think that. But BlackRock they've been very negative as well. I think the recession argument is coming back up again. I think people need to stop denying that we're facing that. So I also think, like I say, though the US CPI year on year takes the headlines, it's always in the headlines, the core has got to come under focus, because we're not ignoring oil, but we're focusing on day-to-day stuff like clothing and stuff. And there's a big increase in that. That affects the retail sector a lot. Because don't forget, the last retail numbers for the US came in. Majority of what people are spending their money on was food and oil and energy. So it's the core CPI. Things are too expensive, like clothes, mobile phones, things like this. That's going to affect the retail market, which in turn affects the economy. So core is going to be really, really important today. Really important today. And the big question, of course, obviously, is if the year on year, has it reached its peak? And I, for one, I don't think we have hit our peak. I really don't. But anyway, all this is building up to one big thing. And that is all about the Fed. All about the Fed. Okay? Because like the NFP, if this comes in higher than expected, the market's going to go, they're going to go for 75 in September, or maybe even 100. Even 100. And the thing is, the question mark is, though, like I say, like the Deutsche Bank expect 8.8, TDS expect 8.7 today, Commercial Bank 8.8, Citibank 8.8, ING 8.7. If it comes in higher, can they wait to their next meeting in September to deal with this? You know what I mean? So, like I say, this is what the market has been so anticipated and so excited about. Now we've got about a minute, and then I'll bring up. Let's go through some scenarios, potential scenarios. Okay, scenario number one: CPI and core CPI comes in as expected. You can then see stocks get a little bit of a boost, because they can see maybe a slight slowing down on it. Stocks may get a boost, but the dollar may be slightly mixed. But it will get moderate gains again, because the Fed will come under attention, thinking they will still raise interest rates, because they will raise interest rates. Scenario number two: announced slightly higher than expected, so only slightly. The market see inflation is still high, and you can see dollar strength. Scenario number three: announced a lot higher than expected. What I mean by a lot higher, I mean 0.2%, 0.3% above expectation. Market would then see the potential of a more aggressive interest rate hike, and the USD could get a boost, and stocks could come under pressure. Scenario number four, 30 seconds. Announced lower than expected, the market could see a rally in stocks and risk appetite return to the market. And scenario number five, announced a lot lower than expected, the market could see the inflation has hit its peak, and we could see a strong risk appetite. So there we go. Those are the several scenarios we could see potentially span out. So anyway, let's get started. Okay, we have 10 seconds, less than 10 seconds to go. Less than 10 seconds to go. This better be good, because we've been waiting all week for this. All week we've been waiting for this. Okay, right. Right. This is the euro straight away. Euro is spiked up. Right, what's happened? Let's have a look. What's happened? Come on. Come on. Give me nearly there. Okay. All right. Okay. CPI year on year, 8.5%. 8.5%. Core CPI year on year, 5.9%. So lower than expected. So we're seeing a risk appetite at the moment, and dollar strength. Dollar weakness, dollar weakness. So it is lower than expected. And it's actually a lot lower than expected. 8.5 opposed to 8.7. 5.9. 5.9 as opposed to 6.1. So stayed the same as last month. Let's have a look at month on month as well. So this is why we're seeing euro strength. Let's see what else is happening with the market. Let's have a look at the dollar yen. Look at that dollar yen. was trading above 134.70, now trading at 132.87. What else is happening? Cable. Let's look at the cable. Cable right up, testing that key level now of 121.97. So yes, risk appetite back on the market. Let's have a look. S&P 500. Look at that. Yes, the market is moved higher. It's got that key level now, 4,190 points. Let's have a look at gold, how gold is benefited. Back above the 1,800 level, $1,805 on that. There we go. Look at that. A lot lower than expected. Risk appetite on the market. Thank God it wasn't boring. Thank God it wasn't dull. There we go. Well, what does everybody think about that? Eric, Philip, what do you think about that? What's your opinion on that, man? What does everybody think? Wow, that's wow. So this is gonna, at the same time, this is gonna give justification to the Fed's actions. 8.5. Let's not kid ourselves though completely. 8.5 is still high inflation. We're still way above their 2% target. Still way above that. So we still have a long way to go. But as I said, this is scenario 4. This is scenario 4 currently playing out. And remember, the scenario 5 said a lot lower than expected. The market could see inflation has hit its peak. I don't know, we could bounce back to say it hit its peak, and we could see a strong risk appetite, which we are seeing right now. What we are seeing right now. So there we go. This is, it has been worth the wait. It really has been worth the wait. So yeah, strong labor market, inflation on its way down. I mean, I'll be open. This won't stop the Fed from being aggressive. I don't think they will. I think they will carry on. Whether or not they definitely won't do 100 basic points in September. They won't need to rush their meeting early either now. They will do their meeting in September, so they won't need to rush it. 75, quite possibly, yes. I think it would be 75, maybe even 50 to be fair on that, but I think it'd be 75. So it's not going to change their attitude. So this is, again, maybe a fool's errand by the market thinking that they will. But that's an exciting move. Let's have a look at other couple of things. Let's look at the dollar CAD. Yes, you look at that. Dollar under horrendous pressure there. Wow. Let's look at the tech market. Look at that lovely move upwards. Lovely move. .85 interest rate rise for the US. You reckon they're going to do 85 basic points? 85. Interesting. I think they'll keep into the boundaries of 75. But 85. But don't forget, their target is by the end of the year to get interest rates up to 3.75, between 3.75 and 4% by the end of the year. I think get on the gold. Philip, you read my mind. I love gold. As you know, I'm a gold, but let's have a look at gold as it is. But yeah, like I said, their target is to get inflation, interest rates down to 3.75 and 4%. The stumbling block on that, which I think is story we haven't seen yet develop, which I think we will see it develop at some point, is the housing market, the housing industry, the mortgage market. Because don't forget, the mortgage market back in 2008 did lead to the help boost the credit crisis. So that's going to be an interesting development with higher interest rates, obviously higher mortgage payments and things like that. But yeah, look at that, 1,802. Cracking. Anybody have any questions for me? Anybody would like to say anything? Eric, are you surprised by that? I'm surprised by that. How about you, Philip? Are you surprised? I'm really surprised by that. I mean, looking at these numbers again, it will be it's really encouraging. But again, like I said before, this is not, I think the market is kidding themselves if they think for a second that the Fed won't carry on being aggressive. Yeah, of course they will. They're adamant to get to 2%, and we're still a little bit way behind that. But anyway, they're doing better than the UK, better than EU, than Europe. So yeah, and the strongest economy is still showing its strength. Yeah, month on month was 0.3, so that is bad. That's way back. Yeah, well, 0.3. That's way lower. Previously, it was 0.7. Expectation was 0.5. For month on month, 0.3. That's a really good number. A really good number on call. Really good. Really good. Hang on, what's this? It's not coming through yet. Right. But yeah, there you go. So what does everybody think? Was that a good watch along? I wasn't too loud, I hope. I did sort of get a bit carried away, which I do. I get excited about the markets. I love the markets. I really do. I get really, I'm into them. But like I say, gold. Now let's have a look. Again, I'm a gold bug, so I'm just going to have a quick look at gold. 1,810 next hurdle. That's on the thin of actually 23.6. So that's going to be quite interesting. That'd be quite interesting to see. Yeah, S&P 500. How close are we now to that key level? It's nearly. We're testing it now. 4,190 points. Amazing. Always a great watch along. Thank you very much. I appreciate that. Thank you. Thank you for coming. Is there any other questions? Or anybody else like to ask me anything? Okie dokie. If there is no other questions, don't forget, I'll be back online again in about just over an hour's time to do the US session. We'll obviously do an update on this, and we'll see how the market is playing out. So please come along and join me for that. So back on again at 2 p.m. UTC to cover that. Also, I want to talk a little bit about Disney as well, because Disney has releasing their earnings after market hours. So Disney might be quite interesting. So I want to talk about Disney too. So, and I've got a brilliant title for the thumbnail, which I can't wait to share with you guys. Brilliant idea for the title. So I'll come to share that. So yeah, please come along and join me. Like I say, at 2 p.m. UTC, I will be there, and we will discuss this, and we'll talk about Disney. If there is no question, don't forget. I totally agree with you, Philip. If it was like this all the time, this is exciting. I will be in it. I'll be doing the all the time. I think the last time it was 9.1. It's supposed to be 8.8. The last, because I did a watch along on the last one a month ago, and we had a bit of activity, but not as much as this. Not as exciting as this one by a long shot. And the same with the NFP. NFP on Friday came in a lot higher than expected. I was saying at the beginning of the program that usually, back in the day, the NFP was really, really exciting, but now it's not so exciting. And I was totally, all of a sudden I was totally surprised, because at last we had an NFP which really moved the market, and the CPI again today, because it's always my biggest worry when I'm doing a watch along, and the market, nothing happens. The market just does this. And I build it up, and it's just really disappointing. But yeah, I'm absolutely locked me in forever. I would love doing it. Anyway, as I was saying, if you think of a question later, put it in the comments below, either Facebook and YouTube, and I will see them. And I will reply to you next time I'm online. Right. So if there is no further questions, a big shout out to Eric, SMF 790, Philip. Always great to see all three of you. Thank you for the interaction and coming to watch. Always a pleasure to see you. And can I give a big shout out to all of you who've watched this watch along with me today. It's been really exciting. And thank you all again for coming along and watching. Anyway, till next time, which will be 5 p.m. UTC. Don't forget, if you're watching me on Facebook and you've liked this little episode, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this little episode, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video and you found it useful and you've put up with me, hello, Michael. Thank you, Michael. A big shout out to Michael. Hello, mate. How are you? I hope you're well, buddy. I hope you're really good. Really good to see you. Like I say, and if you like this video and you've put up with me yelling like a mad person, because I get so excited, and you put up with that, which I can't help because I love the markets, give us one of these. It's always nice to know that you like what I do. Anyway, till next time, remember these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.